Welcome to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. In strategizing your fundraise, it's best to break your raise into tranches. Most raises start with a convertible note or safe note, so one uses a valuation cap rather than the actual valuation. Give the first tranche an investor-friendly valuation cap. For the second tranche, raise the valuation cap by 50%. In the pitch to investors, make clear that there's a limited amount of the low valuation cap equity. When those funds are raised, move to the next tranche at a higher valuation. Continue this stair-step with a valuation cap for the remainder of your raise. This creates scarcity for the low-priced equity and encourages investors to come in early rather than late. Most investors want to do the smart investor thing, which is to be the last investor in the round. Give investors a reason to invest early. This will help move your fundraise along and avoid stalling out. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.